But for more on the markets and how they are moving this morning, we are joined by Michelle Schneider, who is the partner and director of trading and research and education as well for MarketGauge.com. Michelle, great to speak with you as always. Let's start with the global tax deal actually here, if we may. The G7 has backed a U.S. proposal that requires every major corporation in the world to pay at least 15% in taxes on profits. So how do you see the markets reacting if this deal gets finalized and becomes a reality?
Well, one thing that the market seems to hate more than anything really is, well, two things, is taxes, and the other thing is inflation. So we can get to that in a bit. So I don't know necessarily if that'll be a good thing for the markets. In terms of the idea of it, the idealistic idea of it, where, to use Janet Yellen's words, it prevents the race to the bottom, it's probably not a bad thing that some of these larger corporations, they're saying 10% profit targets or more, would pay some taxes. We know if you just take a company like Amazon that didn't pay any corporate taxes in 2018, of course there were reasons. There was carry loss forward. There was also the reduction in corporate taxes at that point. They're saying they're okay with it. So I think there'll be two sides of this equation. What happens with the bottom line of earnings for some of these companies that all of a sudden pay taxes? That will be something to keep out for. And then also whether or not it actually stops what the intention is, which is for corporations to go to different countries that have lower tax rates, keeps them in a presence, and sort of adds some stability. So I think you can make an argument for both. Whether it gets passed, that's another story, because there'll be a lot of opposition.
Since you mentioned Treasury Secretary Janet Yellen pushed for this global tax as well, and also says that the White House is calling for $6 trillion in spending, that it'll be worth it. So do you think that investors will agree with the amount of inflationary concern that is out there right now?
Well, she's saying some inflation is good. And to that point, she's right. But we're looking at other impact. It's not just the economy coming back inflation that we're experiencing. We're experiencing inflation from some real concerns, some of which have been obviously the global supply chain. Okay, that may be more transitory. The labor force, well, there are about 7 million jobs that aren't being filled that may not come back, which she actually herself has mentioned. And then on the other side said, but she expects full employment in a year. And then, of course, the idea of commodities, I think what a lot of people overlook is that commodities are not something that you can just produce like this. Especially if they're grown or mined, it takes a while for the cycle to come back. And heading into this whole pandemic was actually a cutback on supply purposely by farmers in particular, because they had such a glut and such low prices. So now we have to go through a whole new growing season. Some of these commodities could take 2 or 3 years before they start really being able to be produced again. So I think that this whole inflation argument is completely out of touch with the reality of what we're seeing going around the world. And as I talk to people sort of ear to the ground, I hear more and more people think that inflation is just getting started. So that too is something I think will be very interesting unless the Fed comes in and really jacks up rates. And we know that they're not going to do that right now because obviously the economy is still fragile.
So all of these things considered, we're taking a look at the S&P 500 right now, just about 8 points off of its all-time highs. With that in mind, do you believe that there will be another major catalyst that will kind of thrust the markets to even more new levels of record highs, or is this something where you would be exercising more caution at this point in time, given some of the record highs that we sit so close to?
Brad, I think that's the greatest question of the day, really, because essentially for the first time in a really long time, we actually bought a little teeny bit of protection because not so much for the S&P, but the market has gone up, obviously. The Fed has really helped. Stimulus money has really helped. And more stimulus would certainly help again, although the inflation fears come back. But there have been a couple of warning signs on this most recent rally. The unemployment was definitely weak. The yields have dropped, which is typically a flight to safety. And if you take a look at the inside sectors, the Russell 2000 are up, but they're still not anywhere near their all-time high. You've got transportation after making a new all-time high, coming back a little bit along with retail. So these are the signs that are telling me that maybe we're due for a little bit of a correction here. I'm not going to say definitely, but I would say that a little bit of caution right now while there's so much news and not a lot really for the market to sink its teeth into, would certainly be advisable.
Speaking of news, I have to pivot and ask you about the crypto market right now, especially with the news from El Salvador and their president. They want to be the first country in the world to adopt Bitcoin as legal tender. The price of Bitcoin up about $500 over the past day, which, you know, in comparison to the larger price that it sits at, I think last we checked in, it was sitting at about $36,000. Here we've got an update from our team, so good at putting together these charts. Yeah, $36,000 as of about 8:45 a.m. And so with that in mind, how does this effort help legitimize Bitcoin even further?
Well, El Salvador, it's really interesting that he would say that. I mean, he's a populist president and he's a young guy, so it's not completely surprising. And of course, he's talking about the fact that part of the reason why that countries like El Salvador have been struggling is because of central banks, and this would certainly be the go-around, which of course fits into the whole DeFi idea of it. But Bitcoin alone has really been so little in terms of volatility that the news hasn't really done anything yet. That's because of other problems. China, of course, Elon Musk is still talking against it. But I think that he's onto something in that we do know that digital currency, whether it comes from countries putting their own currency together digitally or all of the different cryptocurrencies that are out there, is the wave of the future. The fact that he was bold enough to say it, I think, is a positive thing.
You also have, over the weekend, Jack Dorsey, of course, CEO of Twitter, Square, saying that he's dedicated to making Bitcoin accessible. I think that's pretty key, given the fact that Square already allows Bitcoin buying and selling through their subsidiary and Cash App, and that's been one of the first fintech plays to be able to do that. And then you've got even more of the competitors in the broader fintech front either making their way into more of the crypto accessibility landscape, whether that's through buying and trading of Bitcoin or some of the other most popular coins, or whether that's companies like Coinbase being able to make a public entry into the equity markets, and for them to have even more focus that gets thrust on Bitcoin. I mean, as we go and into the back half of this year, just weeks away from commencing, where do you expect some of the excitement, some of the volume that's come into Bitcoin over the course of 2021, even thus far? Do you expect that to dissipate or kind of stabilize at this point?
I think it's already stabilizing, and I think the fact that the volatility, as I said earlier, has come in is a positive, because that's exactly what you want. You want to be able to attract the retail investor without them being terrified that they're going to wake up to an overnight tweet and then they're going to find that Bitcoin, for example, is down $5,000 or $10,000 or more. So I'm very optimistic overall. However, we're looking at Ethereum. We actually have already gotten involved back into Ethereum, and we do it through the trust, the Grayscale Trust, because of our age bracket of a lot of our investors. They feel more comfortable that way than actually buying coin. And I am particularly interested in what's going on with XRP and the SEC. There's been a lot of news on that front. As far as whether or not the SEC really has a case against XRP. XRP announcing that once this is over, they're going to plan to go public. So this is here to stay. Obviously, like anything else, you got to look at it sort of as a commodity, and you have to understand some level of support and resistance, risk reward. And these are things that I think the more sophisticated retail investors are already starting to figure out. And then, of course, like I said, if they have a base like 35,000 that they can use as a launch pad, and it gets back through 38 or 40, I think you might see more and more people coming into Bitcoin.
Michelle, always a pleasure speaking with you, getting some of your perspectives and insights. Thanks for joining us this morning. Partner and Director of Trading Research and Education for MarketGauge.com, Michelle Schneider.
Adventurous